What's up, guys? Welcome to the backtesting session with Amos. How are y'all doing? Let me just fix that up here. Wait, cam is a little bit too close. I'm not gonna lie. Fix that up real quick. Wait. How are y'all doing? How's everyone doing, guys? Didn't take any trades today. Was looking at a lot of opportunities. There was multiple opportunities that could have formed, but never formed, unfortunately. So stayed cash and looking to see if we have opportunities tomorrow for sure. So let me just do the announcement here. Also, let me go just on the live here so I have access to the chat right here. All right, guys, now I see the chat. How is everyone doing? And you guys see the new setup behind. Unfortunately, the Wi-Fi connection is so bad upstairs that I had to go downstairs to the OG setup. You know, I took the I took the plant with me and the background light, so looking decent. Definitely this behind. So if you guys remember the OG background, then it looks decent for sure. But the lighting is better here, and the connection also is 10 times better. So hopefully you guys will be enjoying it. So for today, you guys already know I've been doing those backtesting sessions for a while now, and what we usually do is we go over all the best trades you could have caught last week using a scalping system. Okay, I'll go over also a little bit more in depth with some questions. Also, I'll answer some questions. I'll go also in depth with some market structure. What would I do in this scenario? And also, let's say, talk about the ranges between Asia, London, what I expect during the New York session. Not only talking about scalping, but also talking about regular market structure and how do I actually look at the market every single day in my approach, basically my framework. So this is what we're gonna do after we're done with the weekly recap and all the best trades of the last week. We're gonna go ahead and do a little backtesting tournament. These are really fun. So it's a 10-minute game where all of you guys, I'm gonna invite you to a link which is made on FX Replay, and then we're gonna have a battle. So trade wars, basically the best wins. So we have 10 minutes. You're gonna see NQ chart. You're not gonna be able to see the date, so impossible to cheat, unfortunately. And then whoever wins and whoever has the best results then wins the battle. I will be giving away 250k growth accounts, so make sure to like the stream, subscribe to the channel, and let's go ahead and start this backtesting session. So you guys already know, if you've been following for a while, I like to play counter trend plays. Okay, talk about it on every stream on Tradeify TV, but there is multiple ways to view the market, especially in scalping. It's totally different. You can make money while price is going up, going down. And what I found in my trading is that the more I try to predict, the less the weaker my results are and the weaker my win rate. Okay, if price is in an uptrend, price creates highs, lows, higher lows, higher highs, higher lows. Okay, you see the structure. It's easy to say in hindsight, okay, you buy here, you buy here, you buy here on the pullback. But if you truly think about it, buying on those pullbacks is basically predicting that buyers are gonna defend their positions in order to create new highs. Okay, this is basically what you're telling yourself and what you're trading. If you're riding the trend. What I like to do though is play with the market psychology a little bit. When price is going up, down, so it creates a high, low, and then a higher high. What does the market do? usually you have a whole lot of buyers that are interested in price here. Okay, you have those buyers being extremely greedy and trying to push price up and being aggressive even if the market is overextended. So what I like to do is wait for those impulsion moves to the upside and wait for us to create imbalances here on the 15-minute chart. And when we create those, then I know the market is most likely overextended and is going to find areas of weakness here to trade back towards the gap for a fuel level. Okay, the market should be exhausted after that impulse, and I want to find a nice scalp back to the downside towards an inefficiency, a fair value gap, an unfilled fair value gap, basically on the 15-minute chart, for an accurate pullback play. Okay, this is usually what I look at every single day. Also looking at the candle behavior. So what are we doing when I look at the opening price? Are we above the opening price? Are we below the opening price? Wicks do the damage. Body tells the story every time. Okay, so this is usually what I'm looking at. And of course, both plays are good. Of course, you could play the trend, and those kind of plays are really good. But for me, I saw way better results by playing those pullbacks into an inefficiency rather than praying that this inefficiency will create new highs and will have buyers standing up. Okay, so I sell the greed and take out my position where buyers would potentially defend their positions in order to create new highs. I don't know if this area is going to create new highs, but I know that the pullback play towards this area is extremely accurate because there's a whole lot of orders right there. Okay, so this is what I'm going to be looking at throughout this weekly recap. And if you have any questions, make sure to type them in the chat. I will respond to every single one of them. Just a little reminder, it's my way of seeing things. It's my approach, let's say, and I like it, but it might not fit for you. It's just a scalping framework. It's not necessarily something that you are gonna find. It's not necessarily the best thing you're gonna find ever, but definitely has some value, and you can use that on any time frame. So I'm gonna walk you through all the possibilities of this week. Okay, so first thing here the Monday. Why I'm not coming back to the Monday, it's because it was the alt. Okay, the AWS. There was a day where we didn't have access to Project X, so I'm not even going to talk about this day. I think nobody actually traded that day, and if you did, then your profit either got removed or you have your profits now. But shout out to Tradeify for that. They worked overtime. But let's not talk about Monday. Okay, now Tuesday, what I like to see here, you guys see we have a nice low here, which is the London low, and we have a displacement candle. When I see those, I know that a potential fair value gap is going to get formed. Price goes from a state of being balanced to imbalanced. And then when price is imbalanced, then this is the moment where I look for potential scalp because I know the market is overextended and needs fuel. Okay, when price is displacing to the downside and we're creating those inefficiencies, those fair value gaps that are unfilled, then I know price is in a state of overextension. I know that this area here, okay, let me just show you the fair value gap. This area right here is an area where sellers were so aggressive that we didn't have a fair exchange between buyers and sellers. And if we have this, then it means that this is most likely an area with low volume. And if price creates those areas with low volume, then we need to retrace back towards them in order to find the fuel and in order for the market to be healthy also. Okay, so here in this case, what I'll be looking for is I'll get my bias from the 15-minute chart looking at those unfilled fair value gaps. We go down, we sweep the London low, and we have an unfilled fair value gap right above us. What does that tell me? It tells me that there is low volume inside this area, and I should be looking for longs soon because this fair value gap got created and it acts like a magnet. Okay, what do I like to see also from the previous candle? I do not want to see price trading below the previous candle's low. I do not want to see price closing below the previous candle's low on the 15-minute chart, because if it does, it tells me that the sellers are still being aggressive to the downside and we're not ready to see a pullback. But if we have an inside bar candle. Basically, if we sweep this previous candle's low, but we close back inside the range, it tells me that those sellers are being weak and we have a potential magnet target above us. So now is the time to look for a pullback. Okay. So here in this case, let's see this 15-minute chart. We sweep the previous candle's low, close back inside the range. I have an unfilled gap right above me. This is how I get my bias. I am bullish bias. So now I will scale up. Okay, I will scale down, let's say, to the 1-minute chart. If I see that the structure is not necessarily telling me that buyers are being aggressive, I'll scale up to the 2-3 minute and find a reason on why I should enter back to this unfilled fair value gap. Okay, so now I am long biased. I'm leaning towards this high being taken out rather than any short-term lows. This is how I get the bias. So here I'll go to this 2-minute chart, and you guys see this is a really, really good chart to look at who's in control of the market. So here we have a leg down. We have a low, high, lower, low. And inside this sweep here, we have this fair value gap, this bearish fair value gap being created. What does that tell me? It tells me that there's a lot of sellers, aggressive sellers located between this candle's low and this candle's high. Okay, so here I can say to myself, all right, if we're truly bearish, we should react to this bearish fair value gap and create new lows. But if we're bullish though, we will disrespect it, and then I will have the lower time frame telling me that price is willing to go higher, and also the 15-minute chart telling me that price is willing to go higher also. If I have both of them combined, this is how I have a high probability play. So here I'll wait for this fair value gap to get disrespected so I know that the buyers are in control. So right here, this is exactly the moment where we disrespected this gap. So here I'll wait for price to hit this pullback, okay, because we broke structure to the upside. Right now, my bias is bullish. I have an unfilled 15-minute bearish fair value gap right above me. I know that this level has low volume. It's a magnet. Then I'm looking on the 2-minute chart to see if there's any signs of aggression from those buyers, signs of weakness from the sellers. We disrespected this bearish gap. We also broke structure to the upside, creating this order block. I have two confirmations that is telling me, okay, Amos, price is willing to go higher right now. Now, this is the moment where you can put your limit order right here. So you could buy limit order right there, and you can put your stop loss. Let's just wait for us to get tapped in. You can put your stop loss right below this inversion fair value gap. Take profit inside the unfilled for a 1-to-1 risk to reward. So here in literally 1 minute, you hit your target. Okay, really, really clean trade in my opinion. And there was someone, I think, who was asking me why. Let's say if you go on this 1-minute chart, you saw a break of structure right here. Of course, this could have been an entry for you, okay, signs of aggression from those buyers into an unfilled gap. But in my opinion, when you have such a clear 2-minute bearish fair value gap holding price, I would want to see it getting disrespected before I have the confirmation that price is willing to go higher, okay? So this is the first play of the week that I saw, which happened on Tuesday, October 21st, 2025 at 10:16 on the 2-minute chart, okay? Sometimes you take a setup before the fair value gap is fully formed. How do you determine that? Before the fair value gap is fully formed? Oh, okay. Okay, really good question, and I'm going to talk about it. Perfect. Okay, let's talk about a scenario. So what I'm telling you guys is that fair value gaps are areas where you could target, basically are fair value gaps. You're using fair value gaps as a tool to find your bias. If you're forming bullish fair value gaps, what does that mean? It means that buyers are extremely aggressive and they're the one controlling the market. But what does that say also in another sense is that buyers are potentially too aggressive and price is most likely going to be overextended to the upside. Okay, so this is what I'm looking for. So let's say in this case, the question that Wavy is asking is, all right, Amos, I see your recaps on YouTube, I see the backtesting session, and sometimes you take a trade before that candle even closes and you predict that basically this candle is gonna close back inside the range and then fill the gap before the candle even gave us the confirmation that it was gonna close below the previous candle's high. The edge is there because of time. Okay, you got to understand the timing aspect of the market. this is the time, and this is the price. And every stream I say, if you don't align them together, it's really hard to find consistency. Why? Because there's so many manipulations that occur because of higher time frame candles opening and higher time frame candles closing. So you need to be careful of those. So here in this case, when I start seeing the second candle displace, this is the first candle, this is the second candle. When I see that the second candle is displacing, then I know that if we do not trade to the first candle's up wick, okay, don't trade here. If we don't trade to the first candle's up wick, I know we have a potential trade if we're closing back inside the range, okay? If we're not aggressively accepting price above the previous candle's high, and I know we're sweeping the previous candle's high and closing back here and trading inside the range, I know that I could potentially close on this 15-minute chart and form an unfilled gap, okay? I just do not need, I can't trade, I can't see price trading to the first candle's up wick, and I can't see price starting to aggressively accept price over and above the previous candle's high. These are my two rules. So here I can mark out this high, and then I'll play the game of timing, okay, which is something I never talked about, but let's talk about it since you asked the question, and it's most likely one of the most valuable things I'll ever say, okay? What I'll say right now is definitely one of the most valuable things I'll ever say, because timing is an extremely important thing in my system. So let's say here we have what I call the previous candle's high, okay, which I also call PCH, okay, in this case. So here the two rules are, let me go here. Okay, don't trade into the first candle's up wick, okay, and also don't close above the previous candle's high, which is PCH. These are the two rules I need, okay, to have an unfilled potential scenario. So here in this case, when the new candle is going to open, we're looking at a 15-minute chart. So it's a 15-minute cycle. Looking at this, if price opens higher and then forms an inversion for value gap right here, but this inversion for value gap is created at, let's say, 10:03. Am I going to take this scalp predicting that price is going to keep running to the downside for the next 12 minutes? Timing wise, does it make sense? Not really, because you're predicting. You're not fully sure of that candle closing back inside the range of the previous candle's high, okay? So what you want to do is play with the timing, is let time do its thing. Let time show you that this candle is going to close. But on the timing aspect, sometimes you need to take risks, and this is what I'm going to talk about. So the timing aspect, let's say price opens higher, creates that inversion for value gap right here, but it's 10:03. So you're not sure of what price is going to do in the next 12 minutes. So you can't enter here. You don't know how this candle will close. It could, create a new low, then go back up, and this candle will close above the previous candle's high, which will make this trade invalid and make you take a loss for no reason. Okay. So what do you want to watch though? You want to watch the time. So here price opens higher, let's say, is accepting price above the previous candle's high, but right here it's, let's say, it's 10:09. Okay, and then at 10:09 you create that break of structure to the downside, and when you create that break of structure to the downside, and it's, let's say it's right here, we're trading right here, then this is the moment where you are, okay, when you're like, I could definitely take this breaker because we have way more chances of closing below the previous candle's high than ripping above this breaker and closing above the previous candle's high. This is what I say to myself, basically. This is the timing aspect of how to trade those unfilled for value gaps. So I always say to myself, all right, with the structure that I currently see, is there more chances of us closing below the previous candle's high or above the previous candle's high? And let's say here we open higher, we push up, and then we form an inversion for value gap right here, but it's 10, let's say it's 10:12. I will take this 10-12 trade because I'm basically pretty sure that we're going to close above the previous candle's high with the timing aspect of this 15-minute candle. But if it was 10:03 though, I can't be predicting because anything can happen in those next 12 minutes. Okay, so this is how I watch price developing in real time, looking at those candles. So here I want this candle to close back inside the range of the previous one. Okay, it doesn't need to be a fancy way, or it could just look like this purely. It could close bullish like this exactly and look like this. All right, if it closes back inside the range, then this is my first step. First step is I need to see this being formed, and when I see this, I can mark out my fair value gap and be like, all right, this is my drawn liquidity. This fair value gap here is the area that I need to target because it has low volume, and it's an area where the buyers are most likely exhausted in creating higher highs. Those responsive sellers stepped in, so now we need a fuel level, which is this 15-minute gap. Okay, and then right here, this is when I scale down to the 1-minute chart, look for my breakers, look for my order blocks, look for my inversion for value gaps, and then try to target it. Does that make sense, Wavy? But this is basically what I'm looking at. So here, this was the same thing on this trade. Price couldn't see, basically failed to close below the previous candle's low. We had an unfilled above us. So here, you scale down to the 2-minute chart. You have a 2-minute bearish or value gap holding price. If we're truly bearish, we should hold it in order to create new lows. If we're bullish, we will disrespect it. And as soon as you disrespect it, this is the moment where I look for longs. Okay. So you look at the market in 15-minute time frame. When you see fair value gaps and order blocks formed, then you go to the 1 minute to look for entry. Exactly. I do this also. You could do that on multiple other time frames. You could do that also on the 5-minute chart if you want. Okay, I could show you a lot of potential scenarios that happened on the 5-minute chart that were really, really accurate. Okay, so here I think I went 1 week ahead. All right, so this was the first trade. Then let's talk about another trade you could have caught. So there was 3 trades you could have caught on that day. Okay, right here, same thing that happened. Okay, if I take a look at this chart, what do I see? First candle is here. First candle. I need to see a 3-candle pattern where we form a fair value gap. And as soon as we form this fair value gap, then I'm going to have my bias. Here is the first candle. I know a fair value gap is a 3-candle pattern. Here's my first candle. When I see that there's a displacement candle on the 2, okay, the thing that I'm saying to myself is I could potentially have a short play if we do not trade back to the first candle's upwick and we're failing to accept price above the second candle's upwick. Okay, so the previous candle's high. So here a new 15-minute candle will open, and I will monitor what is happening. Are we respecting this high? Are we closing back inside the range of this high? And are we trading back to the previous candle's low? Basically, are we trading back to the first candle's upwick? And if it's the case, let's say if we're not closing aggressively above the previous candle's high, we're seeing wicks, and then we're also not trading back towards the first candle's upwick, I know an unfilled fair value gap is going to be left below me. Knowing this, I know this is the moment where I could predict that price will go down towards this unfilled gap. Okay. Why do you backtest by watching the chart ahead? Right now, I'm not backtesting. Right now, it's just a market recap, and then we're going to be backtesting. I'm going through the previous week, looking at the best potential scenarios, so you can understand a little bit of the framework that I'm watching, and then I'll do the backtesting tournament basically. So do you refer to those as candle 1 and 2? Yeah, exactly. So this would be my candle 1. This would be my candle 2, and you're looking to trade the candle number 3. Okay, you're looking to trade candle number 3, but you want the candle number 3 to close back inside the range of candle number 2, and you also want the candle number 3 to not touch the upwick of the candle number 1, if that makes sense. So make sure to like the stream, guys, for the giveaway. By the way, I'm doing 250K growth account giveaways, so I need a bare minimum 50 likes. Bare minimum 50 likes. We're 70 right now, so All right, so here in this case, let's take a look at what price is going to do. Here on this 15-minute chart, we're seeing that price is not accepting above the previous candle's high. We're failing to see aggression from those buyers. Okay, we're failing to see another 15-minute bullish candle close above the candle number 2. Seeing this, did we trade back towards the candle, the upwick of the candle number 1 here? No. What does that mean? We have an unfilled gap scenario. We respected the framework. So now I am bearish now, and only now I can go down to the 1, 2, 3 minute chart to find a reason to enter. Okay, this is how I scale down to lower time frames in order to find my entries. But before that, why am I going to scale down to the 1 minute chart? It will be noise. So here, I know at this exact moment that statistically price has more chances, for me by my data, that price has more chances of seeing this low than this high. So this is the moment where I scale down. And this is the moment where I will try to find reasons to enter shorts back down. Okay, so here what do I have? As a structure, knowing that this has more chances of being hit, I will look at those structures. I will look at order blocks. So low, high, lower, low. Try to enter on a pullback entry here on the break and retest. Stop loss above the high. Take profit on the 15-minute unfilled fair value gap. Okay, this is confirmation number 1. Second confirmation, I want to see price creating a high. Okay, so let's say a low, high. I'm gonna low. Okay, so high, low, higher high, lower low. Okay, this is how we're going to do it, because if not, it's going to be too complicated. But basically a breaker, a failed order block. So a high, low, higher high, lower low. And as soon as we have this, it's basically the same thing, a break and retest. You broke structure to the downside. You're using the this move here that should have held in order to create new highs as your resistance level in order to create new lows back where? Towards your unfilled. So without having a proper framework on why price should go down towards this level, which is 69.5, then I have no clue what price, basically the 1 minute chart is useless. Okay, hopefully you guys understand the importance of having a framework and having a roadmap before even scaling down to those lower time frames. So this is the moment where I go to the 1 minute chart and try to find reasons on why I should enter. So here I will wait for price to close below the opening price right here, which will give me a nice break of structure. As soon as I have this, I will wait for a pullback and then try to play the shorts. What happened right here, unfortunately, price didn't give us any pullbacks and price just ran without us. Here, as soon as this candle closed, this is a really good potential entry. Stop loss above the high, 1-to-1 risk to reward back down towards the unfilled gap. Okay, this is how I see it. Unfortunately, in this case, you had no entries, but the framework still got respected and it was really, really good. Okay, so now let's do this. Right. So now let's go over a trade that I saw on Tradeify TV right here, which was this Tuesday basically, and you guys are seeing the same exact pattern forming in lifetime. This is candle number 1. This is candle number 2. When I see a big aggressive candle on number 2, I know I could potentially be trading the number 3 if we're not trading back towards the first candle's upwick and we're not closing above the second candle's upwick also. Okay, if we're failing to accept price above the previous candle's high, closing back inside the range, I have an unfilled fair value gap right below me, I'll try to target it. Okay, so here, scaling down to the 1 minute chart, let's try to find a good entry. So here price is opening higher. Okay, that doesn't mean anything. Could I enter here? It's 1206. Okay, I'll ask you the question, Wavy. What do you think about this? Can we enter here at this 1 minute inverse, predicting that this 15-minute candle will close back inside the range of the previous one, letting an unfilled gap? Could we? I'm waiting for your answer. If you left, it's GG's. But basically here it's okay. So you said yes. The answer is no. You can't enter now because it's too early. Anything can happen in those next 9 minutes. Okay, it's a 15-minute cycle. So knowing this, you need to wait. You need to wait for more confirmations on time to know, okay, timing wise, I know this 15-minute candle is going to close that way and it has way more chances of closing that way, then now I'm going to take the short based on my structure. Before that, it's really hard to know if price is going to respect this inversion fair value gap. Okay. It needs to be at least 2 minutes before the close. It could be a little bit earlier if you're extremely far. So here, in this case, you're waiting. 1208, you're waiting. Now we're above the previous candle's high, so you're still not willing to take a trade. Here, let's talk about it. Okay, you traded slightly above the previous candle's high. Okay, like literally one handle. So here in this case, it is of course not as high probable than the others. Let's say if we truly close back inside the range, but I would still consider that being a rejection candle. Okay, so when I see this and I know I have an unfilled gap right below me, I know the chances are we will feel this slow and this internal fair value gap. We have way more chances of feeling this internal fair value gap than this upwick. Okay, this is what I say to myself. So then I scale down to the 1 minute chart and then I look for confirmations of sellers being aggressive, buyers being squeezed. So here, at this exact moment, what do I have? I'm already in a scenario where I disrespected this 1 minute fair value gap right here. And also, if I go on this 2 minute chart, we disrespected this 2 minute fair value gap. We're still respecting this block of orders right here. So I am confident that if I take a short right now, it has way more chances of feeling this internal gap than the internal high. So this is how I would use the 2 minute inverse here in this case as a market sale, stop loss above the high, take profit inside the 15-minute unfilled gap for a 1-to-1 risk to reward. Okay, so here it's 1.11, a really good trade here, and let's just sell market, stop loss right above this candle's high, take profit right here. So I confirm, and in a few minutes I hit the target. But what is really cool about this trade, not even that price only took 6 minutes before hitting the target, because I want to be right quick, I want to be wrong quick. I always say this when you're scalping, but look at the reversal point. I told y'all that those gaps are areas where buyers will most likely defend their positions in order to create new highs and basically hold that trend, that bullish trend. Okay, those pullbacks are where? Towards 15-minute fair value gaps. So here, what did I catch? What was my play? I waited for price to displace to the upside so aggressively that I knew we were forming those bullish fair value gaps below me, and then I found signs of weakness from those buyers, signs of aggression from those sellers to sell my shares back towards the unfilled, which is the fuel level. The trade is fine, but the buy seems like the lower risk, higher risk to, yeah, of course, absolutely. The play here is the play which will give you the higher risk to reward. Okay, let's say you're gonna risk less to make more. But what I usually say is a lot of traders find themselves being hypnotized by high risk to reward and really think that high risk to reward is an edge in and of itself when it's not. Okay, finding a profitable system using high risk to reward that yields you, consistent profits over time that doesn't require any discretion is extremely hard, and I can't emphasize that enough. It's really hard. So what I say usually is easy money trades make trading careers. Okay, if you can be consistent, if you can find your cash flow trade, this is what I always say, your cash flow trade. If you can find a trade where, okay, I'm gonna make 300 on this play, and if I see an A+ setup, then I could potentially have a high risk to reward. Okay, so what I like to talk about on those streams is the fact that high risk to reward trades are good for sure, and are trades that will grow your balance way more than low risk to reward, I would say, in the short term, but they don't necessarily always have edge that is replicable in the long run. So what you want to do though is you need to understand that high risk to reward trades don't appear often. They're basically golden nuggets. They don't appear too often, and you need to be able to recognize when to risk on those higher risk to reward trades, when to look at the market when everything is aligning together, to then put your stop loss at an area where you basically get the sniper entry. But it's not true, and I don't believe that there is a great opportunity every single day for a high risk to reward trade. I don't believe in that. Consistently, I believe that if you are someone who can adapt basically to the risk to reward based on what he sees, if the market is extremely shows the best possible setup he saw in a long time, then he's going to position himself in a high risk to reward scenario. But not every single day give you that type of opportunity. Not every single day is huge distributions and you can catch the daily range. Not every single days are like those. So this is just my point of view. This is how I view the market. I think being having the state of mind where, okay, I can adapt, I can be a scalper in a sense, find my quick moves, find my easy money trades, but on the side, work on my A+ setup, work on a system that happen only 7 to 8 times a month, let's say 8 to 10 times a month, but gives me a high risk to reward, but also gives me a high win rate because I'm being extremely patient and I'm not taking those unnecessary losers, trying to catch the bottom, trying to predict the low of day. It's not always that you're going to see perfect scenarios to catch those plays. Okay. And usually if you guys ask me, okay, what kind of play would you try to have a high risk to reward on? It would be this. Let's say price. There's 2 ways to catch really high risk to reward trades. And the first one would be before 9:30. So you can use the 9:30 basically as a catalyst to push you in the direction that you want. Or you're using the 9:30 as a fake out so you could see the 10 a.m. candle expand. Okay, let me talk a little bit more about this. Let's say you give me the question, Amos, if you had to trade high risk to reward, how would you do it? Great, let's talk about it. Okay, because I trade low risk to reward, but positioning myself in areas where I know it's high probability to play for a high risk to reward trade, I know them perfectly. So here in this case, let's say, if I had to play one model for the rest of my life, which is high risk to reward, I would play it in 2 ways. I would wait for Asia. I would wait basically for the market to be extremely bullish first. Okay, weekly chart. I want the market to be above the weekly open. So okay, what does that mean? It means that we're most likely already created the low of the week and we're above the open. So I would consider that here, this low here, this down wick, we already formed the manipulation of a future bullish candle. Okay, possibly Monday accumulates, Tuesday creates the low, then we're on Wednesday and we're flipping back above the opening price. Okay, imagine if you have this. I'm telling you, to have a high risk to reward, you need those stars to align together. Okay, you need a model inside a model on stacked higher time frames to all align together, in my opinion. Okay, so here this would be how the weekly candle would look like. Okay, then daily chart, I would be obsessed with what is Asian doing, what is London doing, and what could New York potentially do. Okay, so here the best thing in my opinion would be Asia accumulates, London sweeps the Asia low, then creates the low of day. Okay, potentially the low of day. We're in a bullish week. We're using the previous weekly candle as our bias. So the previous weekly candle closed bullish. We have the previous weekly high still intact. I want to look for longs. Good. So here Asia chops, London creates the low of day for now. So when we open during the New York session, even before the New York session, let's say it's 8:30. It's 8:30 and I know that we market structure shifted on this daily chart. We created an open low, flip above the opening price. This candle on the daily chart is looking bullish. Okay, we already formed potentially the down wick of a future bullish candle. So what is most likely going to happen? We will form those fair value gaps here on the higher time frame, 1 hour gaps, and we will most likely bounce from them in order to create new highs and expand on that daily candle. So when I know and I can recognize this, then I could potentially position myself at 8:30 or at 9:30 for 2 moves. So the first way would be position yourself at 8:30 to use the 9:30 move as your catalyst. So here 8:30 opens up, we sweep sell side. We have, let's say, an SMT divergence with ES into a 1 hour gap. And then we shift at 8:30. What does that mean? All right, I could potentially take a play here knowing that if I'm right, okay, and if price is starting to push to the upside and 9:30 opens up in my direction, which I don't know if it will, but if it will, I will already be break even, then I could catch an extremely big expansion during that 9:30 move / 10 a.m. Opening. Okay, so here, positioning yourself at 8:30, catching the 9:30 move as your catalyst to the upside, predicting basically the daily range. Okay, this is a way to do it. Or if that doesn't happen, then same thing. Asia chops, London creates the low of day. We market structure shift above the Asia high. Okay, so this would be London, this would be Asia, and then New York opens up. We go down. So this is the 9:30 move. Let's say this is the 9:30 move. It goes down first. And then you would use that 9:30 move as being a fake out. So the Judah swing, enter into this 1 hour gap. You position yourself into those breakers, SMT, inversion for value gaps, and then tight stop. You want to see that daily bullish candle distribute. Okay, this is how we play it. Of course, are those scenarios happening all the time? Hell no. Okay, it happens potentially 7-8 times in a month, and of course you don't need to trade every single day. I don't think frequency of trades is related to your success. I really think it's literally inversely correlated. The more trades you're going to take, the lower your win rate, the more stress you're going to have, the more psychology issues you're going to have to deal with. A lot of stuff comes from the frequency of trades and the way that you approach things in trading, in my opinion. So make sure to find what works for you. But for me, positioning yourself in high risk reward scenarios is not something, it is something that is definitely doable, but you need to lower that frequency or your win rate is going to be so low because of the number of times that price fake out. Okay, but those consistent one-to-one RR moves happen every single day in front of your eyes, and I can show it to you. This is what I show in the backtesting sessions. Okay, so here was the first play. We're gonna walk over the next few trades here so you guys can understand the system. Then we're gonna do the tournament, okay, which is gonna be slightly easier to do if we can have some time. Or you get caught on Trump tweet. Yeah, for sure, of course, you have way more probabilities of getting caught up on a Trump tweet, 100%. Okay, so here, same thing that is happening. All right, let's talk about this scenario. Price is pushing to the downside aggressively, forming what? A bearish or value gap. But one of my rules is not being checked here. What is it? We're not failing to close below the previous candle's low here. We're disrespecting this rule. We're closing below the previous candle's low aggressively, which is telling me that sellers are way too aggressive. I can't look for longs. Okay, so here in this case, the mistake that people are going to make is trying to long and catch the bottom. Here, trying to find the rebalance back towards the gap. Unfortunately, what will happen most times is that you're going to end up with what we call a smelly finger, trying to catch the bottom. Okay, this is the term that all the traders say, especially the OG traders. When you try to catch the bottom, if you try to catch the bottom, you're just going to end up with a smelly finger. Okay, hopefully you guys like that. It's exactly the same kind of quote as being a dick for a tick. But right here, this is exactly a type of trade I won't be taking. I won't be even looking at it. But let's talk about a trade that I would be potentially looking at here in this scenario. Okay, let's talk about this trade here. So you guys see we have an unfilled fair value gap. Okay, let's even go here. We have this first candle being the candle number 1. This is the candle number 2. If it displaces below the first candle's down wick, here in this case, I know that I could be potentially taking the setup because the candle number 3 is going to open up. And if we're failing to close below the previous candle's low and we're not trading back into the first candle's down wick, I have a play. I have a long potential opportunity. Okay. Then here, this is the moment where I scale down to the 1 minute chart and I try to monitor my levels. Okay, I try to look at my levels and be like, okay, here is the level I can't see price closing below on the 15-minute chart. and this is the level where I do not want to see price running towards on the 1 minute chart also. So here, and this is exactly the moment where I will go down to the 1 minute chart. Okay, so here, let's see, price is going down first. And then what are we creating? This is a really good scenario because it will show you also the aspect of time. Here, we created what we call a power of 3. So we opened, accumulated a little bit, went down first. Okay, this is exactly what you want to see when you want this next candle to become bullish, okay, to close bullish. Why? Because we know that every single candle has an open, high, low, and close. Okay, and if we want the next candle to be bullish, or we want the next candle to close back inside the range, then we want this candle to form the down wick of a future bullish candle first, show us signs of aggression to the upside, so we could potentially tell ourselves that this low here is protected. Okay, a candle that is bullish, let's say, has a open, high, low, and close. So here in this case, the open is here, the low is here, the close is here, the high is here. So if it opens, it goes lower first, then gives us signs of aggression to the upside. I know that this could potentially be a protected low. Knowing this, I could potentially take my trade here and use this as my entry level to predict basically that this candle will close. This is the way that I will, and it will also not trade back towards the first candle's down wick. And even if it does here in the scenario, you entered so early that you would just make more money in this case. Okay, so here, let's just go on the 2 minute chart here. Timing wise, it's 11:34. It is early. Remember what I said. It is early. This is a prediction play. This is what we call a higher risk to reward trade. Why? Because you're basically predicting that this 15-minute candle will close bullish even if there's 11 minutes left for that 15-minute candle to close, just using this inversion for value gap. But the thing is, if you're right and if you're correct about entering here, even if there's 11 minutes left, you will make money. Okay, you will possibly bank on this trade if price is running to the upside above the open. So here, the best way to play, in my opinion, is have this as your basically your level to play support off of and to enter on to create new highs, but wait a little bit for more timing confirmations. So here it would be 11:36. Price goes down, still doesn't sweep this low. Then let's wait again, 11:38 here. Then right here on this 2 minute chart, let's see what happens. We close bullish here and we start to push up. So when we start to push up back inside the range, there's only 5 minutes left for this candle to close. Okay, on the 15-minute chart, basically, we're pulling back towards this level. I could decide to enter on this aggression, this aggressive candle to the upside, predicting that we're gonna see some upside. Is it a high confidence play? Is it a really, really good play, an A+ setup? No. Okay, right now it's basically kind of forcing a trade in a sense. Okay, so here, let's say you're starting to push to the upside. You could look for a long because you know there's way more chances, okay, of closing above the previous candle's high than below it. Okay, because you're creating bullish structure, you're respecting those bullish PD arrays. Here in this case, you're respecting this 1 minute fair value gap. Even if you closed below the 2 minute inverse, you still respected this 1 minute fair value gap. You know there's a lot of signs that is telling you price could go to the upside right now. Okay, so here I'm definitely looking for a potential long opportunity. Is it the best one? Like I said, not necessarily. So here you have what we call an order block. So just straight up price creating a high, low, higher high. And those areas, like I said, are good areas to play a break and retest from in order to see price creating a new high. Okay, so here you could definitely enter on the pullback to this area, tight stop loss, take profit back at a 1-to-1 risk to reward. Okay, something that would look like this. So here you get filled, 44. So now, if I go on this 15-minute chart, what happened? This is my drawn liquidity. This is the unfilled fair value gap. So I want to take out my profits when we enter this gap. So here, literally in 1 minute, I hit my target. Okay, this is how I was able to read, okay, this candle is gonna create, this candle is gonna be the reason why we create an unfilled fair value gap. So how am I gonna position myself knowing that this candle will close in this amount of time or will create a gap in this amount of time? Okay. What's good, Holler? How are you doing? That looks so nice. Yeah, it does look nice. I'm not gonna lie, this it does look nice. But you know, like I said, if you can find your easy money trades, those trades where you can time the market perfectly with a higher time frame structure, it could be anything, but time the market with a higher time frame structure, a point on the chart that is repeatable in the long run, you will see those gaps, they're being formed every single day. A 15-minute gap is always going to get formed and always going to get pulled back to. Okay, you see here again, in this case, you're forming a gap and you pull back to it. Was there a potential trade you could have caught on this candle? 100%. Okay, there is a trade that you could catch every single day looking at those gaps, and I'm 100,000% sure of that. Okay, and it could be on any time frames. Okay, I could go even here on this 5-minute chart, and let's go on the New York AM session, and let's see if there's 5-minute gaps that are being created and pulled back to. Here, same thing. We have a 5-minute gap that got created, failing to close below the previous candle's low. Price is being aggressive. We have a gap here. Price comes back to it. Okay, there is so many scenarios of that happening. Right here again, price forms a gap, fails to close above the previous candle's high. This is when I would expect price to create a pullback in the market towards a fuel level. Okay, so many stuff are happening because of a candle closing, a new one opening. So just looking at price, purely price, is you're possibly going to get stopped out multiple times before the move actually happens in your direction. Okay, this is basically what I have to say. Here you see 5-minute gap gets created. Look at what happens right after. Boom, we feel it. Okay, go on to 15. Same thing will happen. A 15-minute fair value gap got created right here. Look at what happens right after. As soon as we create the gap, this is what's really important. As soon as we create the gap, we go and fill it. So grab a time frame, grab the 1 hour, grab the 30-minute, grab the 15, grab the 4 hour, and look at, can I predict how this next candle will print? And if you can, then and only then you can scale down to the lower time frames, because the lower time frames is literally noise. It's a battlefield. It's manipulation here. It's aggression from those buyers, aggression from those sellers. Fair value gap is being created. It's a battlefield. It's really hard to understand if you're only playing the 1-minute chart. The 1-minute chart will show you where price is currently, the fair value of price right now. Okay, price is efficient. Let's say we would say that price is. This is a big debate. I'm not even gonna answer that debate, but we would say that price is always at its fair value. Okay, on the 1-minute chart. So if price is always at its fair value on the 1-minute chart, then you can't be using the 1-minute chart in order to predict future prices. Okay, basically, you would be using a higher time frame to predict the expansion. So let's just go over here, and the rest of let's just go on over Friday, and then we're gonna do the small tournament. 15-minute fair value gap gets created. What happens right after? Feel it. 15-minute fair value gap gets created. What happens? Feel it. Before this high gets taken out, this is the most important thing. Okay, everyone can predict where price is most likely gonna go. Okay, a lot of people can though, but can you predict where price is gonna go without your stop loss being hit? This is really the challenge. Wicks do the damage, body tells the story, gaps are insanely accurate for exits, I would say. So now I'm gonna go over the backtesting session with y'all. me start here the battles. So I'll go here. All right, so I'm gonna click new battles. Next, we're gonna call it Tradeify TV. $10,000 account balance, 10-minute duration, 50 people can join. Make sure to like and subscribe the channel, especially like I see. Wait, let me see how many likes we have. 62. All right, it was locked at 7. I was like, oh hell no. All right, so we have 62 likes. Make sure to like the stream. I'm gonna be doing a 50k growth, 250k growth account giveaways. So let's rock with that. So here NQ next. I'm gonna put max risk. Yeah, max risk is gonna be 2. NQ. I'm gonna create and I'm gonna send you guys the link right now. So challenge a friend right here. So join through this. I'm coming back in literally 2 seconds. All right. So now join the battle. We're 6. So make sure to join through the link that I just sent. I don't think you could join through your phone though. Sorry. But I'll wait a little bit. Then I'm going to start it. So this is a 10-minute game, exactly like a chess game. And I'm going to be trading the system that I just showed y'all. You guys know that trading is random distribution. Okay, you don't know if you're going to win the next set of 10 trades. You don't know how the distributions of wins and losses are going to be in the next set of 10 trades, 20, 30. You just know that in the long run, when you have a profitable system, then you should be profitable after a year or after 200 trades, 300 trades. So do not get discouraged every time you're backtesting. Short-term data have nothing to do with long-term data. You guys need to know that, that's for sure. So last time I was so confused on how to buy and sell. I'll explain to y'all. It's gonna be easy. All right, guys. I don't even know why I put that on, but I don't have Drew on. That is making me comms here. So all right, so let's start. Let's rock. Let's go. Start right here. The battle starts in 9 seconds. Let's go. Let's go, team. Let's go, team. All right, let's go. All right. Okay, so here I'll have the 15-minute chart on my left. I'll also have the 1-minute chart to my right. Okay, so okay, I'm on New York Stock Exchange open. Next day open. Let's go. Okay, so I'm gonna be looking for those gaps and try to feel them. Damn. Could have potentially take a trade here. I don't hate that too much. Let's see on the 2-minute, 1-minute chart. That gap is right below me. This is not too bad for a short play here. I'll try a short play back towards the unfilled. The reason why I'm taking this trade, We're failing to close above the previous candle's high. We have an unfilled gap right below us. We're forming signs of aggression from those sellers here. I could potentially take a short position back towards the unfilled and let it ride a little bit more. So here we just tapped the unfilled. I entered definitely pretty late, so here I'm going to be break even. I'm going to let it ride a little bit more. Okay, some nice position right here. You see it playing in real time, failing to close above the previous candle's high. This is telling me that those buyers are being exhausted. We're pushing aggressively to the upside, but those buyers are buying the greed. Okay, and those responsive sellers just stepped in. We have a fuel level right below us. This is a level where buyers were so aggressive that they didn't give, there was not a fair exchange between buyers and sellers here. Knowing this, this is an area with low volume, and price hates those levels. Price, in order to be healthy, needs to retrace back towards those low volume areas. So here I'll take away another 25%. I'm already break even, slightly below break even. So, and here I hit my target for 1.6R. Really, really clean trade here. Well done on the first trade. I don't even see the day, so I wanted to see say October, or but I can't. All right. So here we do have the exact same scenario. Okay, we have an unfilled gap right above us. We actually have a breaker already formed. I could potentially already take a long here to predict that we're gonna see a new high being formed back into this unfilled gap. Okay, the stop loss placement here is pretty hard to calculate, but I'll do this. All right, I'm gonna enter market 2%. Let's see. Let's rock. Okay, here I got absolutely squeezed. Yeah, I knew it. Definitely knew that we could see a bigger retracement. All good. All good, all good. Let's keep going. So we're seeing a displacement candle right here. We could see a trade. Right. This was not that good actually. Ooh, my days. It's not bad. This is not bad for a long opportunity. Should have entered, definitely. So I want to see price creating a new high here. Oh, fortunate. Fortunate, but this was the same exact play based on the unfilled gap. We have an unfilled gap right above us. We have sellers being so aggressive that we didn't have a fair exchange between buyers and sellers here. Low volume. I want to target this level. Then I scale down to the 1 minute chart. What is happening? We're disrespecting those bearish order blocks, creating bullish breakers. We're also creating higher highs. So order blocks, breaker blocks being respected. I want to long back towards this unfilled gap using those speed arrays. So I'm literally trying to scalp everything here in this case, but I'm going to go to next day open. Okay. Not too bad here. Not too bad for a long. Definitely not too bad for a long. I definitely like it. Definitely 100% like it. Inside this order block, I'll do this. Definitely do this on a limit order right here. I'm skipping the 15-minute candles. This is why I can't see an entry. 4 minutes, 44 seconds left. But you see, in real time, we have an unfilled gap right above us. This candle did close below the previous candle's low, so we're using the 4th as our entry level to create new highs. This is something I didn't talk about today, but okay, here, not bad. Definitely not bad. So we have a 15-minute candle that is sweeping sell side, sweeping also the previous candle's low. We have this 15-minute candle being a candle with no upwick. What does that mean? It means that this candle is not happening a lot. Okay, this is an anomaly in the market, usually all the candles that you see have an upwick and a downwick. And if it doesn't have any upwick, it means that price has a lot of chances of trading back towards the opening price of this candle in order to form the upwick. So here, what do I like about this is the fact that the 30-minute candle also has no upwick and the 1 hour candle also has no upwick. So it's really high probable that we're gonna respect this inversion in order to create new highs. So I really like this trade, even if it ends up not working out. It is, in my opinion, a high probability trade, 100%. So I'm just gonna enter market not being. So here you see when this candle is displacing. Basically, what I'm telling myself is I always want to see us move lower first in order to form the downwick of a future bullish candle. This is what I want to see. So you see here, you see that down move. This is why down moves don't scare me. This is why I have a wider stop. I just don't know how big that manipulation leg will be. I know this high has a lot more chances of being filled than this low though, but I want to let some room to breathe for my trade to pull back, stop anyone that it wants. Then I'll be in the trade. I still be in the trade, but my target is still going to get hit while most people got stopped out here trying to have a tight stop. Okay. Here, what happened, literally the best trade you could have possibly asked for. This candle right here swept sell side, swept the previous candle's low, had an unfilled gap right above us. What does that mean? It means that sellers were so aggressive inside this range that they didn't give a fair exchange with buyers. So here this level has low volume, and this area is called an inefficiency. And for the market to be efficient and to find fair value, which is a fair value gap, it needs to retrace back towards those gaps, those inefficiencies, to find fair value. So here in this case, I want to have those fair value gaps, those unfilled fair value gaps, as a clear target and as an area where I target right now, because I know price is unhealthy right now. Okay, we're way too overextended to the downside. Knowing this, I will look for confirmations to go along. This is when I'm going to trust my inversion fair value gap. This is when I'm going to trust my breaker block. This is when I'm going to trust my order block. So here in this case, what happened, we inversed this 2-minute bearish fair value gap. If we were truly bearish, we should have held this zone in order to create new lows. Here, we disrespected it. So I assume that we're most likely going to create new highs, and every single down move is the manipulation of a future bullish candle. Wow. This is the framework. All right. So 75% off here, break even, and I'm letting the rest ride. Let go. Okay, so here we're pushing up. To the moon. To the moon. Let's go. To the freaking moon. All right. So 51 seconds left. I definitely didn't go too fast here. But it's really nice to see the framework working out in real time. This is exactly what I wanted to show. Also wanted to talk a little bit, make some comms behind also, just so you guys are not left out just watching someone just play a game, which is backtesting. Right here, what do I think price is most likely going to do? Fill this gap. Okay. So here I could potentially use this 2-minute as my inverse point. To see some downside, I would put a nice sell limit right here. There's 9 seconds left. I'm not even going to enter, but all right, GG's. No way. I think I just took like 3 trades, maybe. 1.13%. Let's go. I'm okay with that. I'm okay with that. Podium. What's the podium? What's the podium looking like? So make sure to like the stream, guys. Subscribe to the channel, especially like the stream. I want let's do 80 likes. Let's do 80 likes to for the giveaway. Let's do 80 likes. So we're 85 right now, 62 likes. Let's do 80 likes, and I'm gonna give away 2 50K growth accounts. If we get to 100, you know what? I'm gonna give 3. All right. I'm gonna give 3. Bro, is it gonna stop? It's me, number 1. Yeah, but the All right. I'm just gonna. This is just lagging too much. I'm just gonna leave here. All right. So right now, how many likes do we have? 90. Damn. All right, you guys are about it. You guys are about it. So if you guys didn't know, we're doing it the old school way. Okay, the old school way is the numbers way. Okay, so what I'm gonna do, I'm gonna wait for us to have 100 likes, and then I'm gonna do the giveaway. But we're gonna do it the old school way, which is I'm gonna I'm gonna ask you to write a number from, let's say, 0 to a certain number, and then the one who's lucky then is gonna win. Okay, but I'm gonna adapt it depending on how many people are watching. So yeah. Oh, the market is open. Let's see what it does. And this is what we're seeing on the daily chart is actually crazy. A new week opening gap here at all-time highs. Like this is not even. This is like a liquidity void. Like there was no price trading here at all. All right. So we're gonna do the number thing. So we're gonna start. I need a number from 500 to 600. Go. 500 to 600. Go. Don't spam. Don't spam. If you spam, if I see that you typed more than 2 times, you're cooked. I'm not gonna lie. Okay. Yo, reset. Yo, I missed, and I can't come back. Like I don't know who typed it in first, so like we need to reset. Okay, my fault. My fault. Because I was talking while you guys were just printing the words, the numbers. So we need to reset. My fault, guys. My fault. So we're doing all right. Okay, we're doing from Brian. I need to have like I need to have the chat like really close to me. If not, like to be honest, you know what? I need to have my phone in my hands. Let me just pull out the thing on my phone. All right, so I don't miss anyone. Because if not, it's impossible. All right. So, all right. Perfect. Okay. No, did I say 600 to 700? Did I see it? No. Okay. So we're gonna have number from 600 to 700. Let's go right now. You cannot spam. If I see you spam, you're cooked. Oh my god, it was close. Oh my fuck. No, on God. No one has it on God. Oh my god, it's close. Bro, lock in. Yo, no one has it. Yo. Bro said 559, bro. What are you doing? Bro, am I tripping? No one has it. Oh my god, it was close again. Oh my god, he had it. 631. Ali Akbar Rafi. Pick this. Number hashtag. Pick this. Alright. This is the first winner. Ali Akbar Rafi. 631. Nah, too late. You guys are typing 631 too late. Alright. So now, yeah, we still didn't do the 100, so unfortunately we'll be 2. So then I need a number from bro, you guys are like this right now. Okay, a number from okay, 800 to 900. Go. 800 to 900. Go, 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 go. Oh, he got it. 867. Good shit. He got it. What's his name, bro? The chat just spammed so much. It's Skizk. Skizk 867. Congrats, my brother. This is some people try to play mind games though. I saw the first few numbers were happening. It was 831. Nah, I'm not that dumb, bro. Lock in. All right, guys. This was a really fun session. Hopefully, you guys enjoyed. I really enjoyed doing those backtesting sessions with y'all, showing y'all a little bit more about my framework. Why do I like scalping so much? And why do I genuinely believe that it's really good to find consistency? And with the amount of trades you could potentially take in a day while scalping, it gives you the access to be cautious of the trades you're taking, to be a little bit more patient, and have also a higher frequency of trades in a sense where you know at the end of the day you're always going to find another opportunity, so you're not going to feel FOMO of basically missing out on a trade. So it was a great stream. I appreciate you guys so much for being there and showing love all the time. It was also hella fun to do the backtesting tournament. Showed y'all how I was reading those unfilled gaps and when do I actually look for those confirmations on the 1 minute chart. Hopefully you guys also like my style and the approach overall and what I talked about on the higher time frame, the fact that not every single day gives you a really good opportunity to swing for the fences and swing the bat hard. This is how we call it, for an A+ setup. Not every day gives you an A+ setup, but in scalping, I would say that there is a lot of days where you have an A+ 1-to-1 risk to reward setup. So I appreciate you guys. And don't forget to tune in tomorrow for the Tradeify TV. I'll be there from 12 to 1 p.m. EST. And yeah, so appreciate you guys so much. And I see you guys on the next one. Peace out.